We're Compound Everything, and we talk money markets and investing. And today we are valuing a company that I picked because last week we did a company that you picked and we ran out of time, which is fine because I actually really enjoyed it and I was like into learning about TKO.
I was too. It's right up my alley.
Yeah.
I love mixed martial arts.
So today we're going to do my company. I picked Crocs, and full disclosure, I do have a position in Crocs.
Yes, you do. You've held that position for a while.
Yes, I love Crocs.
Yeah.
So I didn't have as much trouble finding information on my company.
I had a really hard time finding much information on my company.
Yeah, because my company hasn't done a merge. Well, I mean, they did buy Hey Dude. They did an acquisition, but they haven't merged in with another company. They've been around for quite some time.
Well, they've been their own separate publicly traded company for
Exactly.
years.
There's years and years and years of research on
data.
their financials.
Yep.
So it was a lot easier for me.
So what made you pick Crocs as a company to study?
Okay, so one, I'm long, so I thought, okay, it's time to reevaluate my position.
And that's makes sense.
Yeah. Two, I'm thinking of adding more.
Okay.
So I really want to reevaluate the position. And then three, I love companies that have cult followings.
And Crocs has cult.
That is my that's my specialty.
Yeah.
And Crocs just definitely has a cult following for now. Now, you say, well, what's the difference between a brand and a cult?
Yes.
There's not much of a difference, but the main difference is that the people who like a cult product, right? They will do anything and everything to get that product. So, for instance, Crocs came out with Justin Bieber, version of Crocs or an edition of Crocs. They sold out in 90 minutes.
Yeah, same Post Malone did as well.
Yeah, so I was going to get to that. So Post Malone has different versions of Crocs, and our kids bought some, and then they could resell them. They're just holding. They're
crazy.
Worth way more now than what they bought. So that is a cult following.
Yeah.
A brand is like Aritzia, where you go in and women want to shop there, and they love it, and it is pretty strong, and they're making money, and their revenues are growing, and it's still a great company, but it's not quite a cult.
So what other cult stocks would there be out there?
Well, Tesla would have been one. I would still say they are one.
Okay.
They have, people just, the Tesla guys just absolutely love them.
Yeah.
Right? They get angry when you say something against Tesla.
Right.
So
would you think Apple has cult status?
I think Apple had that, but Apple has a strong brand mode.
Yeah.
I wouldn't say they're a cult anymore, but they have a strong brand mark. They have a very, very strong brand mode. And usually with cult type things, they turn into a very strong brand.
Okay.
So, I mean, that's partly why I like them too. So the other thing that makes Crocs just an adored company is that generally people who own Crocs don't own one pair.
That's true. I own two.
You own two.
I don't have many pairs of shoes.
No, exactly. And our kids, I mean, I think between our entire family, we probably have 20 pairs of Crocs in the house.
Gotta be. Yeah.
Right? Because you don't own... And there's so many TikToks and reels and memes about don't buy a pair of Crocs and don't start wearing Crocs because, it starts off with you'll wear them out to take the garbage out, and then the next thing you know, you're wearing them to your best friend's wedding.
That's not uncommon.
Yeah, because we all wear Crocs all the time. And I am obsessed with looking at people's feet. Phil Knight talks about that in Shoe Dog, where he would look at people's feet and see if they were wearing Nike. I've been doing that for a long time because I also am long Nike, and I actually do, when we go to theme parks, I'll sit there and I'll count types of shoes. And when we're at the mall, I'm making sure I'm looking at shoes. And Crocs are becoming a pretty dominant shoe out there.
Yeah. Well, you've said that. The majority of people you see are wearing Nike shoes, and you see a lot of Crocs. So what proportion would you say is Crocs of shoes that you see? Just
it's kind of tough because it's winter here.
I'm putting you on the spot.
Yeah, you are.
I wear my Crocs in the winter.
You do, and a lot of people, our kids do.
Yeah.
Our kids wear their Crocs.
They've got the liner and they're warm.
But you'll see that proportion go up here in the summer.
Yeah, for sure.
So it's kind of hard. But I'm going to say definitely more than 10% of the people out there are wearing Crocs. Now, if you get rid of anyone over 25, that percentage goes way up.
Oh, that makes sense.
So that's the thing, right? Because we're competing with dads who are wearing
New Balance.
The New Balance, which is also actually super popular right now.
Yes, that's true.
Right, you're competing with women and older women who are wearing maybe they're wearing pumps or heels. It's winter, so you have your Uggs, you have your Sorels, so it's more difficult. But there's definitely a growing proportion of feet that have Crocs in them.
Yeah, and the footwear market's huge. What's the market for shoes out there?
I don't know the market on a worldwide measure, but I know that China in 2023, the total addressable market of shoes in China was 82.82 billion.
Just in China?
Just in China.
Wow. Okay, that's huge.
So there's a huge shoe market out there.
And what percentage of the Chinese market do they have? Did they say?
I don't know the percentage of China. I know they are really optimistic about China.
Okay.
They're also really optimistic about South Korea. They've really been growing there. They're optimistic about the UK. Of course, they're growing in America.
Yeah.
And one thing I do know about China is that shoe market, that 82.82 billion, is growing by 3% every year.
Okay, so that's
so
that's
like
huge.
It's just a huge market for feet.
And if they haven't penetrated a lot of that market yet, there's a pretty good room for growth.
Yeah. Now, you went through how does TKO make their money.
Yeah.
For Crocs, it's super easy.
They sell shoes.
And
they sell those gibbets.
Yeah.
As well, right?
Gibbets, yeah. So the gibbets are these little personalization things that you put in your shoes, and Crocs have holes on the top, as you've seen, and then these little gibbets have these little like knobs. And you pop it into your shoe. Those are extremely expensive for what they are.
What are they, like $5 a piece or something, or maybe more? I don't even know. Yeah.
And Crocs has astounding margins for the industry that they're like the industry leader in margins. It's just absolutely incredible, and I'm pretty sure like the gibbets probably are a big part of that. So they probably pay licensing on their gibbets because they have sporting teams, they have
some Disney characters.
They have Pokemon.
I've seen McDonald's.
Another way they make their money is through an acquisition that they did a couple of years ago called Hey Dude.
Now, people didn't like that, didn't they?
No, I didn't like that.
You didn't like that. Okay.
Yeah,
so you're one of the people who didn't like it.
Yeah, I didn't like that. Analysts loved it.
Oh, interesting. Okay.
Yeah, so I was already long in Crocs at this time. And then they went and bought Hey Dude. And I'm thinking in my head, oh my gosh, we go from like this brand that's like got this cult following, kind of cool, right? Like, you know, like I know that the older generation doesn't think it's cool, but you know, it's a fashion statement.
Yeah.
And then you get a dad shoe.
Maybe they should call it that, dad shoe.
Oh, and I was just so upset when they acquired the dad shoe company.
Yeah.
Because I was like, why?
They look kind of like boat shoes. If you don't know
They're
what Hey Dude
loafers.
looks like, they look like loafers.
They literally look like a dad
shoes.
wearing cargo shorts barbecuing.
Now, I would say I've tried them on before. They're very comfortable.
Yeah, they're not ugly, but they're not.
Well,
Crocs.
I mean, they're comfortable shoes. I mean,
Yeah, the issue with Hey Dude that I had was if you are a 15-year-old kid, right? You're a Gen Z or whatever that generation is, and you're going out, you want Crocs. And you want the red pair of Crocs, and you want the yellow pair of Crocs, and you want the white Crocs, and you want the line Crocs, and you want this gibbet, and you know, you have very specific, you want Crocs. You're not going to buy dogs. I think you're not going to buy the no-name ones at Walmart.
Yeah.
You want Crocs.
Yeah.
I don't think when dads go shopping for loafers, they're like, I want Hey Dude.
Yeah, that's not the same.
I'm going out and
I think
I'm getting
you're
a
very
Hey
right
Dude
on that.
shoe.
Yeah.
No, they're just like, bro, I just want a loafer that's comfortable and I can walk around Disney World.
Right, it slips on, slips off. I don't have to tie my laces. You know, it's easy, right?
Yeah, and that's why I didn't like it, because I'm looking for a cult following, and I don't think Hey Dude has that. That being said, they've done really great with Hey Dude, which makes me love the management.
Interesting. Now, one thing I did notice is, you know, they have standalone stores, Crocs does.
Yes.
In some places, right? You know, Mall of America being one place that we've gone to recently, and they have a Crocs store. I didn't notice Hey Dude shoes in there.
Nope.
So I see them at other places like Payless and places like that. So
they talked about that in their most recent quarterly call or annual. I did both. I think it was quarterly call.
Okay.
And they talked about how they want to put Hey Dude shoes in more outlet. Like, so they know.
Okay. That it's kind of like a lower brand.
That they're, well, I wouldn't say lower brand. I think they just know that their consumer for Hey Dude is just looking for a comfy loafer for a good price.
Okay, fair enough. Yeah.
So they know,
makes sense.
and that makes sense. And they talked about how they wanted to do a demand pull model for inventory and whatnot. So that just means instead of producing shoes and sending them to the outlets based on forecasts, they're using more data and trends. So because they don't want to run into an inventory problem.
Fair enough.
Which, I mean, let's be honest, all retail ran into inventory problems after the pandemic because everything went haywire.
Yeah, that's right. Yeah.
So now that being said, Crocs is also in outlet stores. It's not a super expensive shoe.
No.
And it is definitely growing. So more and more and more people are feeling comfortable with it.
Yeah.
We own pairs. We would have thought we'd never worn.
Oh, back in the day, I thought they were ugly.
We have a friend who, like, and I won't say his name, but if you asked me if he would put a pair of Crocs on, I would have been like, yeah, I'll bet my life on that. And I would have, well, ceased to exist. Because he eventually did, in fact, buy a pair. And that blew my mind.
And he loves them.
That's the thing. You end up loving them. And that's why I like them. Because it's like, you're like, I would never wear those. Those are ugly. They're disgusting. And then you get a pair. And then you get another pair.
I think the big thing with Crocs that, in my mind anyway, just kind of in discussing this with you, the thing that sells people on Crocs is they're customizable. Mm-hmm. You get this pair of white clogs or black clogs or whatever, and you put these gibbets in them, and it speaks to your personality.
Even the colors speak to your personality.
Even the colors do. And then they've come out with other ones that are kind of like higher and lower. But I mean, I think the
clog is
the main seller.
The main seller, yeah. Going back to Hey Dude, they proved me wrong, which I'm super happy about as an investor.
You'd like to be proven wrong in that way.
Yeah, and that's one of the ways I learned to trust management, because I find it difficult to read their, listen to them and just read their shareholders' letters, which, by the way, they don't have shareholders' letters, so that's like a big X on them. You can't, because they're salespeople. Like, every CEO sounds great.
Oh, absolutely.
Right? And so it's really difficult to tell if they're trustworthy or not. But one way to tell if they're trustworthy is if the acquisitions they're making, A, make sense for their business, and B, they can execute that acquisition really well. And they've done an excellent job with Hey Dude. Now,
interesting.
I will also say I didn't personally like it just because I was like, is it really that, like, do people care if they wear Hey Dude?
Right.
But it did take them out of having only one type of shoe.
For sure. Diversified them a little bit.
So I did like that because it did take some of their eggs out of that basket. So that part was good. But the management has really managed to incorporate Hey Dude and really execute that brand well. So in 2022, Hey Dude brought in $700 million.
Wow.
Which is already good, right?
That's a lot of dad shoes.
That's a lot of dad shoes. A lot of dads are liking Hey Dudes.
Yes.
And in 2023, they brought in $900 million. So that is greater than 20% growth there. I actually think it was more like $950 million now that I think about it. So that is like amazing growth. So they are doing really good with it, and I eat my words. And that's why they are CEOs of the company, and I am an investor.
That's right. You just give them the money and they allocate it.
I just trust them with it.
That's right.
Now, if you look at Crocs metrics, they are just really great across the board. Gross margin, operating margin, revenues are growing, bottom line's growing, and they're buying back shares. They're just buying back shares with aggression.
You told me the other day they decreased their share count by what percentage?
Yeah, since 2013, so over quite a bit.
Yeah, 10 years.
They've decreased by like 20%.
That's unreal.
Yeah, so I love that. And the other thing I like about that is Crocs has never been super overvalued for what they do. Yeah. And so they're getting it at really good prices.
I think in part, I guess investors might be a little nervous that it's kind of like a fad company. In a sense, like, what happens if Crocs all of a sudden,
I'm nervous about
go
that.
out of style, right? Like, what if all of a sudden people are like, I don't really love Crocs anymore?
That's definitely the biggest. That is the biggest concern as an investor. And that's why I said I watch feet. We go, and know I do.
Oh, I know you do.
We go out, I am watching feet.
Yeah.
I pick up the kids from their high school, I am looking. I am asking, hey, do people still wear Crocs at your school? I'm listening to our kids when they say, I want this color Crocs. Is it still even Crocs? Is it something else? Right. Like, I am 100% my ears to the ground because brands can change on a dime.
They can.
And Peter Lynch had a huge loss because of that, because of a brand change.
Okay, which one was that?
I can't remember. It had something to do with women's fashion, and then a movie came out, I think a Bonnie and Clyde movie or something, and then the fashion changed, and overnight he lost money. And so you really have to be careful when brand is your only. Yeah. And Crocs, let's be honest, it's not as old as Nike. No. So you have to be careful. And they are unique shoes, to say the least.
Oh, for sure. I mean, they are a little bit of a one-trick pony. Yeah. The clog, as you mentioned, the clog is their main seller. They've tried to branch out into other ones. I haven't seen them take as well. Yeah. So that's...
Not yet.
Yeah, not yet.
I mean, Crocs 20 years ago, people were I'm never wearing them. And they were all wearing them.
Yeah, for sure.
Hey Dude is actually not that much of their revenue yet. Okay. But if they can grow it, it can become a really valuable asset to them. Okay. They have a goal of reaching $5 billion by 2026. And I think they're like absolutely going to do it. In fact, I think they're going to shatter it. So I kind of like to see that they made this goal a little while ago. Okay. And they are, in fact, going towards it. They said their guidance was 3 to 5%. Growth, so that's good. They're doing really well in America. They're doing really well here, but we're a small potato, so it doesn't really matter. They're really growing in China. They're really growing in South Korea. The main countries that they're struggling with is India and Japan.
Oh, interesting.
Those are their two countries are struggling, so they got to figure it out there. One of the things they do in order to really push their brand is celebrity collaborations. Okay. And we just talked about that earlier, but they have Post Malone, Nicki Minaj, Joe Rogan has, every time they see, like, you'll see a lot of celebrities wear them, they push it, but they also have specific collabs with certain celebrities. So they kind of took a play out of Nike's book for that.
The shoe drops and all that.
Yeah, and it's done really well. Yeah. And I really attribute personally, I really attribute Post Malone and Justin Bieber for making Crocs a lifestyle. There was a certain group that jumped onto that when Post started wearing them and Bieber wore them, that just jumped onto that, and I really attribute those two guys for really making Crocs what it was. So maybe it was a little bit of luck. Maybe it didn't have to do so much with the company, but they know what they're doing. They've proved that for all these years.
Yep.
And then, of course, we have the pandemic. The pandemic came, and then it's all athleisure. It's all comfy clothes. It's, you know, crew necks and sweatpants, and no one's wearing a suit. No one's wearing anything fancy.
Right.
And their sales went bananas.
Oh, fair enough. That makes sense.
So what people are concerned about, because they've had such extreme growth lately, is that was a pandemic thing only, and that it's not going to last. But they argue that although the pandemic was wonderful for them, that it's had staying power now, because the pandemic's already been over for quite some time, and Crocs is still growing.
Well, the shoes wear out. I mean, I bought my shoes maybe about a year and a half ago, and the bottom's starting to wear out, and I'm thinking of replacing them.
I mean, because you think about the material they use, which is all like, it's all very environmentally friendly, and they're really big into that, and recyclable and all of that, which also people love. So they do wear out. They're not. They're not a forever shoe, but all shoes wear out.
All shoes do.
Yeah, because it's like floors.
Right.
You're never going to find a floor that lasts forever because it gets used.
Oh, for sure. So, I mean, at some point I'm going to have to replace my Crocs.
Yeah. So they also run campaigns, digital marketing campaigns and all that. So they have hashtags like Crocs with socks.
Oh, okay, yes.
Hashtag come as you are. So they are really pushing this comfy lifestyle. And as we know, like the Gen Zs, that is who they are.
Yeah.
They are about comfort, but they're also about like wearing who they are on their clothes, which is where the gibbets come in.
Yeah.
And so it's like the perfect thing for Gen Zs. Now, the interesting thing is over half of Gen Zs own Crocs.
Oh, wow.
Yeah, millennials, there's a high percentage. Our generation, not so much, but it's slowly starting to grow.
It's picking up.
So that is just a side note.
Okay, interesting.
Yeah, so a lot of their spend does go into digital marketing.
Okay.
And unfortunately, they did mention that their SG&A is going to be increasing because of that.
Okay.
Which we don't love.
Yeah.
But I mean, if it works and it helps, then we do love it. But it's one of those things you really have to trust the management that they know that the dollar spent on advertising, you're going to make more dollars back.
Oh, exactly. It's money well placed.
It's money well placed. Yeah. So we're going to trust them on that.
Yeah.
I'm going to go through their numbers. So their gross margins are north of 50%. I commented on the fact that they were just astounding for the sector they in. So that is the number for gross margin. Their market cap when I did this, which was last week, over many, many days, was $7.3 billion. Okay. And their PE was 9.4. Their diluted EPS was 12.79. They had an average ROIC of 27%. This is over 3 years.
That's huge.
Yeah, I did 3 years. I could have done more, but I just feel like they had that exponential growth over the pandemic. So I don't know. I wanted to do, this is trailing 12 months.
Okay.
So I thought we will take one of those years, but we won't go all the way back to 2018.
Sure.
Because then there's like this huge boom.
Okay.
So I didn't necessarily want to do that because we're not sure if that type of growth is going to continue.
Right.
So over 3 years, their ROIC was 27%. Their ROE was 58%.
Wow.
Yeah, and their ROCE, which we know Terry Smith loves, and we've started to use it, is about 25%.
Wow.
Yeah. So
those are huge numbers.
Those are huge numbers. And their EV to EBITDA is 6.8.
Okay.
And their EV to revenue was 1.9.
Okay.
Now, EV to EBITDA just says like how much, so you may be wondering like what the heck does that even mean and why would I look at it? So that's just like how many years is it going to be that I make my money back? That's kind of roughly if it projects, if it continues on this trajectory. So it's saying in 6.8 years you would make your money back from this investment, which is like not bad for a publicly traded company.
Oh, absolutely.
In my mind.
Yeah.
So their revenue and growth over 10 years has been over 300%.
Oh, wow.
Yeah. And then, of course, they had that huge pandemic boost. So, again, it's still huge. Even if you were to slow down that growth there, it's still huge, but maybe not as huge. Maybe they're not going to continue that. Crazy.
It sounds like they're going to international markets, but to be able to threefold that growth again, it would be probably a stretch, I'm guessing.
I would think so. Now, China is really loving on it, and so is South Korea. And they do the same playbook there.
Yeah.
They have some big Chinese celebrities and big influencers that they've been using. I mean, we'll see, right?
Who knows?
But what we have learned from watching other companies, just because you can do something in one region
Yes.
doesn't mean it works out in another. Sometimes it does.
And sometimes
it doesn't.
Yeah.
I know Walmart couldn't do it.
Walmart couldn't cut it, yeah.
And you would think, like, they're Walmart. How could they not?
And they're a retailer. How can they not make the same playbook work?
Yeah, so time will tell. But if they can really get a lot of market share in China, they can do those numbers again.
So having said all that, what do you think Crocs is worth?
Okay, so I did a really back of the napkin owner's earnings. And the reason I said...
Sounds like mine.
Yeah.
I did before.
Yeah, because I don't use owner's earnings a lot. So for owner's earnings, I take their net income and I add back in depreciation and amortization, plus or minus payables and receivables.
Yeah.
And I take out their capital expenditures.
Maintenance.
Yeah, I take out their whole capital.
Oh, you take out their whole capital. So that's more conservative.
Because there's two reasons for that. The first reason is because it's more conservative, so it gives me a bigger margin of safety and more air. And two, I am just way too lazy to figure
out what the maintenance capital expenditures are.
Exactly.
It's hard to find and it's annoying.
It's annoying. Yeah. It saves me so much time. And you know what? It saves me from making
mistakes.
So why bother?
If you could be lazy and be more conservative, do it.
Why bother? Right. So according to owner's earnings, I have that I would be comfortable buying that company at $7.9 billion.
And so you said the market cap was around $7 billion?
Something like that. You can check it. Check it right now. Okay. So you just checked it. So it was.
So it's $7.53 billion as of today.
According to this, I'd be like, I'd be comfortable adding to my position. So I use owner's earnings. What I like to do more is a discounted cash flow.
Okay.
As you do. I do it based on earnings per share.
Yep.
So I did two. I did a conservative and I did a less conservative.
Okay.
So I'm just going to use my notes so I get all my numbers right.
Sure.
So I use a discount rate of 12%. And I know a lot of people say you should be using 15. I just don't feel in this environment that 15 is needed. I think 12% is pretty punishing as is.
I've seen some super investors use 10.
That's crazy.
Yeah.
For me, I'm just not good enough to use 10. I need to have that higher discount rate. So for both of them, I used 12%.
Okay.
I didn't change that number. Okay. I went over 5 years because with the trend, I'm not going to go 10 years out in the future.
For sure.
It hasn't proved itself that it can be 10 years out in the future.
Right. In 10 years, is Crocs still going to be the same popular it is now?
Exactly. So I did 5 years out in the future. For the less conservative, I gave it a growth rate of 6%.
Okay.
And that's because the management said they're planning to grow at 3 to 6%.
Okay.
So I just took
their
word.
So you took their optimistic number and threw it in there. Sure.
And I figured if they do grow at 6%, then they're probably going to have a decent PE of 25 because investors are going to catch on. It's going to push the multiple up.
Sure. Yeah.
So if I do that, I get a valuation of $240 a share.
Wow.
Yeah. Now, my more conservative one, same thing, discount rate of 12%, 5 years, but now I did a growth percent of 3.
Sure.
Because I took the lower end.
Yeah.
And then I said, if they're only growing at that, they're probably not going to get that same multiple, but it's still a
PE is
decent
going
company.
to be not very high, yeah.
So let's say, in a good run, they have a PE of 20.
Okay.
Okay? At that, they get $168 a share.
Oh, wow.
Now, right now, their PE is very low. So the argument would be, are you not assigning it too high a PE considering their average PEs?
Right.
And I would say maybe.
Okay. I was just going to say that, actually.
Yeah, I was going to say, maybe I am. But if for 5 years they can grow like this and really reach more feet and really grow their market share, I think that multiple's going to get higher. And that's my argument.
Okay.
If they're growing at 3 to 6% year over year over year, I think that PE is going to increase.
To expand. Okay.
I think the fear is that right now it's lower because people don't think it will.
Right. So at this point, having looked into it and done the valuation and whatnot, would you add to your position at this point? Or would you subtract from your position at this point?
Okay, so I wouldn't subtract from my position, but I ran those numbers because I do believe them to be right, and I do believe if they grow like that, their PE would be there. My fear is that it's such an extreme brand. I don't know where they go from here. And so in order for me to feel comfortable to add, I would actually want to be even more conservative. So what I would what I personally would do, I would take the low number of 167 or whatever I said and divide it by 2.
I think that's reasonable. And you could even slash the PE in half then.
Yeah, in order for me to do that. So what is that, $80? So I would add more at around $80 to $90. I'd feel more comfortable with that.
Yeah.
Only because they don't have a networking moat.
No.
Maybe they kind of have distribution, but that's weak. They don't have a switching moat.
Definitely not.
They don't have a toll bridge moat.
Nope.
They don't have a secrets moat.
Nope.
They only have a brand.
Have a brand. That's right.
And I wouldn't, and it is culty now, but it might not be.
Right. In 5 years, it might not be.
Cults fall apart.
That's right.
We know that.
Very quickly.
And brands fall off. And
That's
so
right.
that is what makes me nervous. But right now, it is everything I love, which is why I'm long, because I don't think their run is over.
Okay.
And I got in at a good price because we have kids in the house.
Yeah.
And this is just an example of like, do what you know. We had a lot of high schoolers in the house.
Mm-hmm.
We were seeing feet. We were realizing that people were becoming obsessed with these shoes. We could see it, right? And so we were able to catch it before other people caught
Now,
on.
if I'm not mistaken, I think you started buying in when the PE of Crocs was something around low single digits.
Yes.
Yeah.
Very low single digits.
Right.
Yeah.
I don't remember what you told me it was, but it was extremely low.
Yeah, I think it's around 5-ish.
Right. 4 or 5, I think.
Yeah, and so and I could have, maybe I should have trimmed and bought that, but that's not my style.
And you can't call that.
Yeah.
That's a difficult thing to go back and do.
Now, I will say that every time we go to Foot Locker, every time we go to any shoe store, anytime we go to the mall, I will make sure that I am asking the point of sales people, oh, how many Crocs do you sell? Oh, this is an interesting pair of Crocs. Do you sell a lot of them? Kind of just acting as a customer.
Yeah.
The minute that they say they aren't selling Crocs anymore, the second our kids say, oh, you can put those Crocs in the giveaway pile, that will be too late.
Yeah.
But the minute I'm noticing that they're actually putting other shoes on their feet when they leave, that will be when I'm like, yeah, I think I'm out.
Yep, and that makes sense.
Or if for some reason it goes bananas and everyone goes and I'm like, whoa, this is getting way overvalued.
Yeah.
That's what I'm hoping for.
Well, ultimately, yes. And then you'll exit the position.
Yeah.
So these are two very different industries and companies that we've covered over the past couple weeks. They're of interest to us, and we like to invest and look into things that we can see, things that we can kind of tangibly appreciate and whatnot. And so these are two companies that would be examples of ones that would interest us, and it's kind of gives you some idea of how we kind of approach the methodology we use to approach these companies and whatnot as to whether or not we want to look into buying them. And I think you did a great job of breaking down Crocs.
Thank you. Thank you.
So I think that'll do it for this week. If you can like and subscribe to our video, that really helps us out.
Thank you for watching, and we will see you next week.